Good morning, good afternoon, good evening, depending where you are on the planet. And welcome to the Thursday, the 16th of March, Bull versus Bear webinar for Trade Day. Steve Miley here on the call. Welcome, everyone. So first, a heads up regarding tomorrow webinar. Fridays are very tricky for us here at Trade Day at the moment, so there'll be no webinar tomorrow. No webinar on Friday. We'll put a note into the chat, and we're going forward. Probably no webinars on Friday in the interim. So in the intermediate term, no Friday webinars. So just so you know, going forward in here at the moment. But let's get on with today's webinar. I'm going to look at the macro fundamentals, what's impacting markets right now, right here. So having been all about US regional banks, SVB collapse Thursday, through Friday, then over the weekend and Monday, Tuesday. I've been talking about Credit Suisse for a while on the back burner in here, and obviously it's all been about Credit Suisse the last 24 hours. Massive sell-off in Credit Suisse stock, massive rebound in Credit Suisse stock in here that we've seen over the last 24, 36 hours as they have been basically rescued, bailed out by the SNB. For those of you who don't know, the Swiss National Bank. Remember, Credit Suisse are outside of the EU, so they're not under the remit of the ECB, the European Central Bank. The SNB, the Swiss National Bank, stepped in, effectively offered funding, offered a credit line to Credit Suisse. It looks like they're going to survive for now, shored up, given a backstop, given a lifeline. Lots of rumors that eventually they get broken up or they get bought out or whatever that might be, taken over. So what else do I need to talk about? Well, let's just run through some of this. So it's grabbing the headlines up here, obviously. So I don't want to start there. I want to start, where do we go? 5 things to start your day. Here we go. So Credit Suisse rebound. Stocks were basically down 30% yesterday, back up 30% today in here. A 50 billion franc, $54 billion lifeline. They're going to use that to potentially shore up their debt in here. So Credit Suisse biggest share said everything is fine. It didn't look like that, and a huge sell-off anyway. First Republic Bank, obviously some issues there as well. Cut to junk rating by S&P Global and Fitch on Wednesday. Strategic options, including a sell. Goldman Sachs boosted assessment on the odds of a US recession to 35% over the next 12 months now, on the back of the crisis we're seeing in not only the US now, but the global banking system. And then stocks did rebound in here, but then have stuttered a little bit in here overnight, having had a rebound. ECB, there's a big focus on the ECB now going into today. Here we have the ECB. Some fairly light. We do have the jobless claims, job data in here for the US coming up. But at 9:15 Eastern, we get the ECB decision. Okay. The anticipation has been for a 50 basis point, 0.5% increase. Okay. Then we get the press conference afterwards, and then Lagarde is also speaking later today. So 9:15, the decision, 9:45 Eastern, the press conference, Lagarde speaking later, 11:15. We're going to have to wait and see what that brings. Okay. But it could be a little bit interesting, maybe gives us a clue of which way the Fed are heading. Okay. We were expecting 0.5. Christine Lagarde in here, the ECB president, said as long ago as December, flagged a likely 0.5% increase. Even as recent as then last week, they were still talking about a 0.5% increase. Okay. But we've had a lot of turmoil since then. French inflation is still running hot. So inflation in the Eurozone is still running hot, and in the whole Euro area is still running hot. So real issue for the ECB. Do they stay with their credibility and hike what they said they were going to hike? Do they risk the financial system? One of the biggest investment banks in Europe is very shaky at the moment, the Credit Suisse. So, and even though they've been rescued by the SNB, there are obviously issues in the system, highlighted by what's been going on in the US. So all of this in here weighing on the ECB decision. Do they maybe only go a quarter? Do they not go at all? Do they wait? So it's going to be very interesting. It might give us a clue to what the thinking is, what the outlook is maybe for the Fed. This could and will probably have an impact, okay, on US stock indices, okay, because it's almost certainly going to have an impact on European stock indices and could easily drag US up or down. So you certainly should be watching out for this. I know you guys probably think in the US, it's all about the US. Well, yeah, a lot of the time it is, but this is important. Okay, so definitely keep an eye at that. 9:15 Eastern today, and then 9:45 the press conference to maybe give us some more clues. Okay, and Credit Suisse though has really been, Credit Suisse default swaps drop as market panic ease. So default swaps blew out; they've actually eased off in here. And then look, big ECB hike called into doubt by the Credit Suisse situation. So, I've got articles here. Big ECB hike called into doubt. JP Morgan in here. Analysts see Credit Suisse takeover as the likely scenario. 3 scenarios of Swiss lender amid turmoil. I think I said this yesterday. I don't want to go over old ground. I used to work at Credit Suisse. I've been self-employed, but I had my own company now for 10 to 11 years. But the last investment bank I worked for was Credit Suisse, was a director for 3 years. And when I left, I said I didn't feel that they had a focus of who they wanted to be. I felt that they wouldn't exist in 5 to 10 years' time. Well, it's taken 11 years, and I don't think they will exist as they in the same places they are within the next few months. In here, it looks like we're going to see them either disintegrate into a smaller group, or maybe just get bought out. So we're going to have to wait and see on that one in here. We've already gone through 5 things to start your day. So here was credit default swaps drop, market panic easing in here. Let me run through a few other headlines in here. So shares leap back higher from Credit Suisse in here. $54 billion lifeline that was sent from the SMB. On the precipice, how Credit Suisse day of drama unfolded. In case you missed it, I'm going to throw this one into the chat, guys, okay? You can see that in the chat now, so you can take a look at that on Reuters. ECB into the eye of a banking storm. Again, look, what are the ECB going to do? Caught between a rock and a hard place. And not just the ECB. We have the Bank of England next week. They had their meeting next week, but they've had an emergency meeting because of what happened in Credit Suisse. So that's happened, So this is not just, obviously, this stuff is global, right? We had 2007, 8, 9 global financial crisis, right? Clearly this has started in SVP, kind of the Credit Suisse stuff, and SVP kind of unrelated, but kind of, they're not directly related, but certainly correlated. It's because of the higher interest rate scenario been in, and all the changes, the inflationary pressures, the higher interest rate scenario has put more stresses into the banking system. And if we look where we are in here today, so we were actually up in here this morning, but we've seen just dip back lower in here, down yesterday. The Nasdaq actually, it was pretty much unchanged yesterday. The Nasdaq outperforming. Why? Because yields, remember, have been going to lower levels, and the Nasdaq is full of growth stocks, and growth stocks like lower yields in here. What else do I have? Fed, to hike or not to hike. Next moving question is bank crisis feared, and investors brace for a hard landing in here. So as banking woes stock recession fears, we mentioned there Goldman Sachs now seeing a more growing likelihood of and stock futures steady but down. Yeah, we have dipped a little bit in here, and this was from yesterday. Credit Suisse erupted into full-blown crisis. So lots of negatives yesterday, more positives today. But then the markets have sort of retreated slightly in here since then. Let's look at the CME. But I say, I really want to make sure you guys focus. I know a lot of our traders are in the US. Most of you are trading US products on the CME, right? This is going to have an impact today, potentially, a high likelihood for me. Okay, so watching out for this as we go in today. The ECB meeting, 9:15, then 9:45, then 11:15 Eastern time. Watching out for those. Let's look at the CME tool. So this is risen again. Remember, this was up at like 40% yesterday, like unchanged. And that was at the height when Credit Suisse was falling apart. Okay, so that's eased now. So we've actually seen chances of a Fed rate hike still next week, back up above 75%. So we're still looking at a rate hike. What I think is interesting now is as we go out the curve now, look at this. So if we go to May, okay, May, we're still looking for another 25. So we're looking at 225s by May, okay, now. But by June, we're then back to 475,500, only 25 up from here. And maybe back to where we are now. So basically March, May, up 25 is what's being priced in. by June, maybe cutting back at least 25, maybe 50. By July, actually rates here, July rates, look, 450, 475 is where we are. The best bet, 425 to 450. 25 down from where we are now. We're looking up 25, 25, yeah, down by 75 from that peak, okay, is what the market is pricing in. By September, 400 to 425. That's down 50 from here. So we're going up 50 and then potentially down a point of cuts by September. So between May and September, we're looking for a point of cuts is what's being priced in. Up 50 and then back down a point. Okay, so net 50 down from here by September. And if we just go further out the curve, November still up down 50. And then potentially even more, down 75 from here by the end of the year. So a far, far, far more dovish tone. This is pricing in that expectation of what Goldman are saying and what the market is starting to fear, recession now, okay? And the Fed having to react. The Fed kind of blocked into a corner of having to hike rates because they said they're going to hike rates and inflation is still a concern. But as inflation comes under control, there's a real concern that the impact of what we've seen from the regional bank crisis in the US plus Credit Suisse will slow the economy anyway to the point of a mini banking crisis creating a slowdown in the economy, slowing inflation, slowing the economy that the Fed will need to be cutting rates because we're going to be heading towards recession. That's the shift since basically last Thursday, Friday, through the SVB crisis over the weekend and through Monday, Tuesday, and now Wednesday, Thursday, Credit Suisse, okay? It's caused a shift of fear of recession now, fear, and then thinking that the Fed are going to be far more dovish from basically the middle of this year. What does it mean for stocks? Well, I look at the stock charts now. We've been talking about this inverse. This is on the NASDAQ, right? So you had this inverse head and shoulders down here. Remember, you're on the June contract, guys. Please make sure you're on the June contract. We've already had people having issues with lack of liquidity when we go to like after hours in here. But look, here's the June contract. You got this kind of head and shoulders in here. There's the neckline for this head and shoulder. That was already completed, okay? And you pretty much got close to target on that already. But now you've broken through like another argument, another head and shoulders. Here's the shoulder. Here's another shoulder. The head and shoulders is itself a bigger head, okay? There's the neckline that I drew yesterday. We went up through there with this outperformance from the NASDAQ. If we take out that peak there, that peak up there on the June contract is 12,493 and a quarter. Up through there would be a really positive signal. That would fully reinforce and complete this bigger bottoming pattern. And we can see it here on the daily. Remember, we had that long-legged doji back on, that was Monday, right? Monday, when we sold off and then rebounded. Then a big up move Tuesday, a dip and a rebound in here, creating that other shoulder in here. And then there's real risk in here if we go and put this onto. And I'm going to extend this out. Okay, and then we got another one in here. If we go in. Oh, where's my... This does this sometimes, right? It's very frustrating. It just disappears on you. Through here, we're already through this one, right? Or actually tapping on it now, right? Look at that. Tapping right at the door of this more accelerated trend line. This looks like a bottom to me, okay? I think if you're a swing trader, I am a swing trader and I am long. I think there's a real risk we're back up to this peak in here from February in here quite soon. I think we could be up there in the next. I think the Fed could easily step dovish and we could be blasting up to here. So and ECB could be could rekindle that hope or reinforce that hope of a more dovish Fed. Okay, so we're watching out for that. But obviously we're going to get nothing from the Fed because they're on their blackout period. But I think real risk of us challenging through this trend line and maybe this trend line up through that peak there and this peak in here, as I say, what did I say? 493 and a quarter, up through 493 and a quarter. This looks a whole lot more bullish. And I think it can't help but pull the S&P up, which we do have underperformance by the S&P. Let me take this to the, actually, let's go here. I'll go take it to the daily chart. Actually, put it on both of these. Let's go this one here. Take this one to the daily chart. So if you look here on the daily chart, remember June as well. Okay, here on the daily chart, so more consolidation in here for the S&P. Coiling consolidation, yeah? Lots of inside days. We've basically been inside Monday's range in here since Monday. What's the high from Monday? Let me just check. Do we even breach the high? 71.5. We just got above it on Tuesday, 72.5. But you're kind of almost confined within Monday's range. Breakout of Monday's range. I mean, for me, if Nasdaq goes topside, it takes the S&P with it. And what have you got in the S&P? It needs, break through there. 39.71.72. We get up through 39.71.72 in here. It looks a lot more bullish. Completes the, again, inverse head and shoulders. Okay, is completing. It needs to obviously get up to and through there. I can easily say I think stocks have been amazingly resilient considering what's been thrown at them. Okay, given the two big, two fairly big, intermediate size crisis, had regional banks, then an investment bank, failing, get or not failing, the investment bank close to failing, the regional banks failing. The market's doing very, 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 very well in here, and it's taken, kind of some positivity from the fact that the Fed pivot more dovish, and we're going to get a clue on that from the ECB today. So I think this could easily complete this bottom today / tomorrow. And I think the bases go in. The base has already really gone in on the Nasdaq already for me, and we could be off to the races again. So even though on my reports I'm kind of hanging on to a negative tone, I think that could very easily pivot to my more bullish today. Okay, so watching out for that, guys. Okay, all right, there. I'm going to wrap it up there, everyone. Any questions from anyone online? Remember, no webinar tomorrow. And keep an eye on the site today, guys, on the public site. We've got some maybe updates in here that could be quite interesting. So watching out for those. Not 100% guaranteed. We're hoping to roll them out tonight, but updates to our programs. So watching out for that. You'll be able to see more online on the public site in here at tradeday.com. Over the next 24 hours, we hope, it's been a long time coming, but we hope to release some new programs in here. So watching out for those. I'm going to wish you all a great trading day. Take care. Stay safe. No webinar tomorrow. I'll be back with you on Monday. Bye.